Well, I think that the trend will remain the same as last year. I think the big winning cities, they will get stronger and stronger. I think that's how it is. Urbanization will continue. That's obvious. Then something we have not touched here yet about the risks and all that, how the immigrants and all the refugees and all that, how that will influence political environment, and will that change the game a little bit? But generally speaking, it's really the big cities and the most attractive cities, like winning cities, they are coming more and more attractive. I haven't heard anybody saying that urbanization will end in the near future. It will continue, and maybe even in a stronger phase at the moment. So it's really the winning cities. But then also I would like to highlight some of the second-tier cities, not really the secondary cities, but second-tier cities. I think that if you are willing to do the smaller size of investments, maybe second-tier cities are still attractive for you, and maybe the yields are a little bit more attractive for your investors as well.
Well, I think one of the very strong trends we're seeing is people looking more and more at alternatives as they hunt for yield. So, the hotel sector has obviously been pretty active last year, a record year in terms of transaction volumes. We're seeing a lot more interest in student housing, healthcare, PRS in the UK in particular. A lot of big institutional investors, both domestic and globally, very interested to get into that sector. So I think that trend will continue. Everybody's talked about Spain and the opportunities there, and clearly a lot of capital went into Spain last year as well. And I don't see that trend slowing down. Still a lot of interest in that market. So I think those are sort of the current trends that we're definitely seeing.
I think the cities is a really interesting theme that I know we've already mentioned it a few times, but I thought at this stage of the cycle, when we're getting, yields are well below average, we're getting towards the end stages maybe of the current cycle, that you'd expect to see a big divergence in terms of the number of active markets as investors start to look away from the main tier 1, tier 2 cities and into the kind of, the secondary ones. But we haven't seen that at all. So our information actually shows that there's been a kind of reconcentration in many of the major cities. So in Germany, that's the big seven cities. In France, 75% French investments in Paris. Even in the UK, in actual fact, there's been a reconcentration on London last year. So there was more investment went into London last year than in the regions, which was a turnaround from 2014. So I think the cities is a really interesting one. In terms of sectors, I think just to echo what Arthur said, we've seen a greater proportion of deals for alternative assets in 2015 than we've seen previously. Certainly as investors look to, there's a hunt for yield, isn't there? So as investors look to expand their horizons.
Well, this morning I was in the one seminar or sub-seminar here, and there was about 40 international investors, and basically nobody was very keen to talk about or looking for investments on the Eastern Europe. Russia was not mentioned at all. So I think that has changed also compared to the previous bull market, and of course the political situation is the main thing why that has changed. So those are the countries where at least we stay away, and also we are very careful. We don't have any investments in Greece, and most likely not have in the short term. Italy is also quite interesting, but other than that, I think the whole Western Europe is our playing field.
Notwithstanding the terrible recent events, I think Turkey is a market that also is, even before the recent events was off radar very much for investors. And again, it was a country that was very, very popular in the run up. So I think that's probably one as well to add to it.